Okay, very soon we'll be joined by the management of GNA Axles. The company had reported its Q1 numbers a while back. It turned out to be a decent quarter for GNA Axles. A quick recap before the management joins in. The revenue growth stood at 14.3% on a year-on-year basis. Of course, the last year's base was quite low, impacted by the COVID second wave. Operating margins have expanded on a year-on-year basis to 13.3%. The profits are slightly lower, as as that picture will also come up for your new screen. Profits at 27 crore versus 29.4 crore. GNA Axles does get a lot of revenues from the North American truckade vehicles in the form of exports. So since that piece of the market is doing very well, the exports for GNA Axles is a trend that the street is going to be watching out for. In fact, we've got the management waiting by with us. Ranbir Singh, the managing director and CEO of GNA Axles with us. Mr. Singh, morning. This is Rima here. Could you talk about the demand trends? Q1 has started off on a steady note. Can you talk about the domestic markets, the export markets? What is it that you're expecting for the rest of the year?
Rima, very good morning. Thanks for inviting me today. Regarding the demand about North America, actually we are in export, we are depending upon North America, Europe, and Turkey, Japan, and Asian countries. Demand is pretty good for North America and Europe also. In spite of in July, August, there are holidays in Europe. In spite of that, the demand is pretty good. This is for export scenario, but in domestic also at the same time, as you know, our dependency is on CV and majorly on the tractor market, off-highway. And off-highway is performing very good and demand is very strong. This is the scenario in domestic and export.
What can we expect by way of a revenue growth for full year? Can we do a 15-20% type of revenue growth? And if you could break that up in terms of domestic as well as exports, the guidance?
It is too early to say about the whole year about the growth. As you see in last year, also in first quarter or first half, the demand was very good and company has performed very well. But immediately after in Q3 and 4, the market has taken a lot of correction in the stocks or inventories. So our overall top line has dropped in Q3 and 4, and subsequently profit was also affected. But it is too early to say right now. But overall, this year we are anticipating around 10 to 15% growth in the volume and top line. As far as the profitability is concerned, it is affected, stressed because of the freight and the steel prices.
Okay, good morning, Mr. Singh. Thanks a lot for joining us. This is Pavitra. So, on the margin front, we have seen a steady improvement over the past few quarters. It's currently over 13%. You had earlier said that you will look at margins of 13 to 14% for all of FY23. You think you can do better than that now? We do have raw material costs also, which have cooled off significantly.
Raw material increases in India has gone up from April onwards, but major players, CV players, they have not settled yet about the first quarter. And it may affect in next quarter, but overall profitability, our company is maintaining these days between 13 to 14%. Earlier, it was over 15%. Because of freight and raw material prices, this is affected.
What's your current order book, Mr. Singh, and how would it compare with, say, same time last year?
It is slightly better for Q2 and Q3 also for export outlook is good. But we were anticipating after the North American inflation, we were anticipating demand will taper down, but it has not happened yet. It is still strong.
Any number on the order book that you can share?
Whatever we have performed in Q1, Q2 will be slightly better than that one.
Okay, Q2 will be slightly better. 50% of your sales come from the CV exports. Can you tell us a little bit more about what the North America truck orders are looking like and what is the overall demand? Because you did mention that, you were fearing perhaps that because of all of these fears of recession and all of that, you could see some kind of hurt on the demand side. Has that come through at all? And what is the export order looking like?
Export, over 55% of our revenue comes from export, that is from North America and mainly from Europe. And those order books are pretty strong, and we are very hopeful this will continue till December and next year also. And on the other hand, we have developed programs, about 5 to 6 programs for our existing customers for EV also. So our components are in EV also. Our total revenue, over 1% revenue of the company comes from the EV shafts.
Do you see a great momentum in the EV business, in EV shafts?
Especially in the CV and light commercial vehicles. So it will catch momentum in next 2 to 3 years time. But at this moment, the most of the production enhancement in at global front, it is in the cars.
Okay. Any adjacencies that you're looking to get into, Mr. Singh?
We are at present not into the passenger cars. We are into SUVs and with the heavy vehicles. But whatever programs they have started, we are there.
Would you look to get into passenger vehicles?
We are not into passenger vehicles.
Yes.
We will remain into SUVs, multi-utility vehicles, and the multi-utility vehicles in electrical is going to happen very fast.
Okay, so passenger vehicles is not an area that you're exploring at the moment.